Gold is still struggling this Friday, so does it need China and India to step in to pick up the pieces? But is Asian demand likely to pick up? Well, we're going to be asking our next guest today, Frank Holmes, the CEO of U.S. Global Investors. Frank, good to have you back on.
Good to be back with you.
Now, I know you often talk about the love trade coming out of Asia and how vital a role it plays for gold. What do you make of what's coming out of Asia right now, Frank? Is it there, the love trade?
Sure, because you saw that China, who's become the important price maker, not just a taker like they were 10 years ago with the Shanghai Exchange, when it was closed for the first week of October, is when all this sort of manipulation took place and knocked the price of gold down because there's such big physical buyers. I think it's now more stable. But what's really interesting is in 30 years of data, 80% of the time, gold surges in September and corrects in October. So I think it's just going through that correction mode, and we'll hit the 200-day moving average and find support.
Well, we have Diwali coming up at the end of the month. We have the Chinese Lunar New Year, obviously towards the end of year. But some analysts say it may not be enough to boost prices substantially. Do you agree?
No, I think that there's lots of reasons for gold to modestly, if it stays up at this level, it's still up over 20% for the year. So I think we're going to see gold remain healthy. The other thing to remember is this inflationary number has been picking up from a year ago. When we look at August numbers, September numbers, inflation is rising, and so that's important when looking at the gold market for that fear trade.
So we saw gold, really hold on to the 1250 level here, which is key. Some see it as gold forming a near-term bottom here, Frank. Do you see it as another buying opportunity?
I do. And if you haven't, then it's a great opportunity. And I've watched this disconnect. It's really important to see this disconnect between the GLD, physical demand of gold, and the futures market. And it's predominantly the futures market that knocked the heck out of gold, and the physical market actually had rising sales. There was more creates going into it. So I think it's very positive and constructive. I would have been worried had the GLD had big redemptions and the price of the gold has knocked down the futures market. So I say stay tuned to this station.
And next week, Frank, we have some really key data coming out. We have the ECB meeting, which could be a game changer for gold. We'll see if the ECB continues to expand or retract its bond buying program. But what's your touchdown pass going to be?
The ECB, I just think, is lots of wind and noise of raving socialists. So I think more important is CPI. That's the touchdown pass. That's coming out on Tuesday. It's estimated to be around 2.3%. And think about it. 2.3%, what is a 10-year government bond? You're losing 50 basis points a year on your money for the next 10 years. That is what makes gold very attractive for the fear trade. And most currencies trade around the 2-year government bond yields relative to each other. And the U.S. is less than 80 basis points. Inflation is going to come out at 230. What happens if it comes out at 250? I think then that would be a catalyst for gold to surge.
Okay, so we could see gold recover some losses next week, Frank?
Absolutely.
All right, thanks so much for joining us, Frank. And thank you for watching. We'll see you next week.